Welcome to episode 1 of the Price Forbes Podcast, where risk gets real and markets get unpacked. Everything that you hear today should not be construed as financial or insurance advice. It's general opinion of the guests that we have in the studio today. And I'm delighted to be welcomed by our two guests, Reed Stanway, Head of Digital at Key Underwriting, and Trent Somerville, Technical Director at Price Forbes. Welcome, gents.
Great. Thanks for having us.
Okay, guys, so let's get cracking. Trent, this is something you said to me before. The genie is very much out of the bottle. Where do we stand today with AI and the impact that that's having on the insurance market?
Yeah, absolutely. It's been one of the big changes of the last few years, absolutely. And we can't have these conversations without touching on AI. But what's it done? We're seeing in our industry a real positive use case around structuring data that was previously unstructured. I think that's the big one. That's happening all through the chain as well. So we've got to remember that just because we can take traditional documents, we can pull out the bits of data that matter. We're seeing that happen with our US clients. We're seeing it with our underwriting partners as well. So I think overall, we're just seeing increased data quality across the industry.
And how is that affecting our partnerships with the likes of Key and the way in which we're trading from a digital perspective?
Yeah, in a real positive way. Key are a great partner for us because they're like-minded in how they see technology and how it fits into the whole process. But where it's helping is auto-follow portfolio type capacity has been around for a little while, but the way we would access that at Price Forbes is rekeying data from somewhere. So now we've got the ability to use AI to structure our submissions. We're in a position where the data doesn't need to be rekeyed again. And we're working on direct integrations at the moment. I think probably by the time this goes live, we will be live and we'll be able to flow data directly from our Vantage platform into Key's platform and get a quote with no rekey.
And we're touching, of course, on digital platforms, digital trading in general across the marketplace, but being specific to our relationship with Key and the work we're doing. Reed, would you just give the audience a sense of what you're seeing across Key as an organization, but specific also with what you're doing with Price Forbes?
Across the market as a whole, it won't be surprising, a lot of brokers are investing into the automation of follow, digitizing follow. They got a number of these broker facilities. I think it's the not cool thing to not have one of these. And they're approaching them in very different ways. So we're seeing a general gravitation towards these sort of broker workbenches. We have marketplace platforms like PPL or Whitespace. Interesting to see that the trend is more seeing those as almost like a clearinghouse of sorts, where they're there to execute the policy, but we're seeing brokers really wanting to own that placement journey, put their secret sauce, and use some of the AI as a part of their distinct workflow that creates their differentiated advantage. And then when it comes to ourselves working with Price Forbes, I think it's pretty neat to see what Price Forbes has been doing. It's pretty innovative business on the placement design standpoint. So traditional insurance, how we think about facilities, how we structure different ways of delegating or non-delegating, and then how that mixes with the technology. I think it's been one of the more interesting businesses to watch. And for us, what's really nice is I can invest in our APIs, but I don't necessarily have to always do what's been historically quite challenging when we're integrating, is doing the back and forth, a long protracted integration exercise. Once we've done it with Price Forbes, it's actually been quite a pleasure in that yourselves, because of some of the things that Trent has mentioned, are able to give us the data we need, and we can then quote and we can get off to the races, and we can also lift, shift, and replicate. So I think it opens doors for our partnership, and we're seeing some pretty interesting success as a function of that.
Can I ask you both this question? When I talk to clients, whether it's CISOs, CTOs, COOs, they often tell me about the challenge they have at their leadership of convincing the powers that be, whether that's CEOs and stakeholders, shareholders, to invest in technology. There still seems across a number of industries to be a nervousness or an apprehension about putting the investment into digital technology. What's the journey been like for you both within your respective firms of convincing the powers that be that this is the direction of travel?
I think quite the opposite this time round. Again, back to AI, everyone reads it everywhere, hears about it everywhere, and just don't quite know what we were going to do with it, but knew we very much had to be part of it. So we've been very fortunate at PF to be quite early adopters. We've had a relationship with Microsoft for 3 or 4 years now, where we were fortunate to be at the very cutting edge of what's available. And it's slowly just becoming part of our DNA, part of how we think. So I think we've been in a really fortunate position here. It's Be more, what are you doing with this? What are we doing with this technology, rather than us having to ask if we can use that technology.
Right. What about yourself, Reed?
Yeah, do you know what? I've had the benefit of seeing a few different companies. So I worked at one of your competitors for a decade, which was one of the large three, and that was an interesting environment to get approvals. I think it was certainly the legacy way of
A little bit of red tape in there,
it was
perhaps?
a little bit of bureaucracy, a little bit of challenges. That was also, even that business isn't experiencing a bit of a change. In my observation is that the AI trend. I think I was listening to the All In podcast this morning, and they were talking about. I think it was Bill Ackman that was on it or something, but he was saying. No CEO in the Fortune 1000 isn't thinking or actively investing in it. I think there is a struggle on everybody's still experimenting. They're trying to see what the return on investment is. What does that look like? But I think if there is no one business that isn't actively looking at it, so that makes it easier for folks like myself and Trent to actually get some of the approvals. We personally at Key, we have the benefit of being backed by Fairfax and Blackstone, and those two combined give us they've been great to support us on that journey. And from my personal experience, it's been a really interesting company to join because the bureaucracy is less there. I mean, there's a very strong willingness. We have some of the cool toys in the backyard to play around with. We're still very measured on how we go when we look at it, because I think what's interesting with AI is you can do thousands of things with it, really run away with token spend and other costs. And I just recently was over at ITC listening to some of our competitors and some of our peers. And I think that's a real struggle right now in the first half of this year is cost and expense on tech versus what's the return on investment and what's it looking like. I think everybody's starting to focus a bit on.
Do you both get a sense that CEOs know that they need it, or they certainly feel as though they want it? They're just not entirely sure why?
What's been unique with AI is that everyone can use it. Like everyone got it as Copilot or ChatGPT or whatever the tool was that they got. So the CEOs and guys on the board using it in their personal life, going, hang on, we need some of this in my company. The difficult part is not just drip feeding it here and there, because all you've done is you've added an extra layer of cost to your organization.
Yeah.
What we've done, and it's baked into the Elevate program, is just reimagine whole processes, but reimagine them in the era of AI and sort of make them fundamental parts of a new process. I think that's where we're starting to turn the AI dream into a financial reality, actually starting to ring the till.
Yeah, I think in addition to that, I think we are seeing that CEOs, they're seeing what their competitors are doing.
Yeah,
and
absolutely.
I think that's like that creates this urgency or demand. And so it's almost every month we're seeing one of the large companies out there saying that they've done a partnership with Anthropic, or, Aviva just started doing stuff with ChatGPT on putting MCP over its APIs. Those are a bunch of acronyms that we're all starting to learn about.
Yep.
But in short, you could buy some of Aviva's policies through ChatGPT. So I think, whether or not those are right for each individual company is, I think, what CEOs need to think about is, all right, just because I've seen that, do I need to rush and get that? But I do think it's creating the urgency or sense of urgency is that I need to really think through how AI can support my business and where that fits. And it's different for different companies. Like Key, we're a follow-only syndicate. We don't have to do too much in claims. We follow the claims lead. But, AI applications and claims are creating some really strong returns from what I'm hearing about our competitors in the insurance space.
You won't be surprised, guys, to hear that in my particular role, I have a huge interest in the impact that AI and technology has on our client experience and client outcomes. And we'll come on to that more in the second half of the podcast. I just want to touch on where we are in the shape of the market now and where we might be in 5 years' time, and get your thoughts around that. When I came into the market in 2004, I probably went to Lloyd's once a day, placed one risk if I was lucky, and had 8 pints at the Lamb. That has changed, right? and therefore, I'm keen to understand what you think is happening in the market now versus if we looked at this in 5 years' time. What do we think the market looks and feels like with regards to the use of AI, but moreover, the use of technology and digital applications?
Yeah, it's going to be a dramatic change. I think people's lives will be different. You think 5-10 years ahead, I think there'll be very little rekey. A lot of that friction is going to disappear. And again, back to the Elevate program, that's something that we're focused on. But a byproduct of being able to take away a manual document journey is having a lot more data and having it much, much earlier in the process. So we're going to be able to capture a lot more structured data at inquiry, where previously we were only able to do that on business that we've quoted or bound. with all that data, it's going to open up lots of different innovative options that people hadn't even thought of. So back to the day in the life of a broker, the relationship with the client isn't going anywhere. The trust that the client has isn't going anywhere. But how the broker does their job and what they can offer the client is going to be a lot more data-driven, a little bit different. And if you break that all down to a wholesaler like ourselves, it's going to mean faster quotes. It's going to mean the ability to pay the markets faster. And it's going to mean that there's products that we will uniquely be able to create at Price Forbes, which is a product of having a digital view of our whole portfolio.
I can only agree with that. And then I think I can add to it. I think, so the broker and the underwriter, they don't disappear. I think that their world, I think someone recently framed, is it evolution or is it revolution? I think that it is a evolution of the role. So what are brokers good at? I was once upon a time one, but they are a partner in risk. And so, it's what their either retail customer or the ultimate end insured, they partner and they seek advice for. You're not going to have the CEO of Boeing saying, ChatGPT, how do I place my, aviation tower? They're just not going to do it.
Yeah.
So I think there is relationships that are going to be there. I think that the bar and level of expectation on what a practitioner is doing will be escalated. I think we already see it in our own personal lives. Like, it wouldn't surprise you, when you're dealing with I'll make it up, like mortgage broker. You're in your ChatGPT and you're throwing whatever you've read at it back to them. I think that we'll see that, unfortunately, or maybe fortunately, putting more challenge against those risk partners and advisors, sort of setting that expectation. On the flip side, to your point, the tools and the capabilities that are at the fingertips will mean that those practitioners will be able to do that much more. Interestingly, I think the world will change slightly in that they will have a tough decision on, do I delegate that to my staff or do I delegate it to an agent, a technology? They'll be able to hand certain activities off. I think the more human EQ soft skills are really hard to delegate. And we'll see more of our brokers, which we're really good at, or our underwriters, in the front face, dealing with the customers, talking about what these risks are, but being able to provide more interesting solutions at the fingertips. How do we transition or create new insurance-linked securities or reinsure it? Like, there will be better options that are made available. And I think that will attract more business. Those that have it and are able to harness it it'll be a differentiator, I think.
And that's not too dissimilar to what we've seen in the financial services market, the wealth management market, where engagement with clients became more dynamic. Clients were expecting the use of technology to shape their decision-making, and they wanted the advisors to become more dynamic. And that's quite exciting, one would imagine. And Trent, I'd be keen to get your thoughts on that particular piece, which is leaning into the EQ, leaning into the how we use technology applications to shape discussions with clients. Is that something you're already seeing happening within the business? And that can only be accelerated further in the coming years.
This is why I think Microsoft have nailed it with the name of their AI, being Copilot. So you're still the pilot, you're still in control, but you've got the Copilot next to you to flick the controls and do the checklist and all these other bits and pieces. It's a really good metaphor. So you think about the role of the practitioner going forward, they're still going to be in control, they're still going to be front and center, but they can have a great wealth of knowledge sat next to them, dishing up immediate answers, understanding the client context quicker, coming up with bits of analysis quicker, finding the right report quicker. It's going to make it all much more efficient for the client looking in. Like, the quality of service is going to be more detailed, it's going to be more nuanced and much, much faster. And that's an expectation that they're going to have.
And I suppose on the underwriting side, it's almost the same. It's just a different set of outcomes and what we're looking at. But, we have this concept called augmented underwriting, where, to exactly that point, we might have an agent that does extraction, maybe he'll do some deep research, maybe he'll do some augmentation, and then it'll present that information on the screen of an underwriter, or in our case, the algorithm. But interestingly, what historically has been challenging is we're trying to think about the risks individually and just in that individual risk, and not as often in the frame of it in the context of the portfolio or the broker. And I think that what's beneficial to that is that for our algo, if we see that we really like that and in the frame of the portfolio, we have enough aggregate for it over the course of the year, we might be able to offer an even bigger line. And so that provides even bigger value, or we might offer a slightly lower line. What I'm getting at is that these tools will mean suddenly there's more availability of capacity potentially as a function of, and we're not going to necessarily be as ineffective with maybe our APIs or AGs than we historically have. I'm not saying it's been ineffective, but I think it will get sharper. And I think you'll be able to produce better results. So that augmentation, whether it's to an algorithm or as an individual underwriter, I think it produces better results.
It keeps coming back to better quality data.
Yeah, absolutely.
Enabling all kinds of innovation that wasn't previously
Does that
available.
continue to be the big challenge for all industries, is the quality of the data? That it feels to me that that's actually what the race is all about to some extent. It's about how can I get better quality data to shape those decisions, both as a business and client outcomes.
And data that's yours.
Right.
Like everyone needs to remember that all these AI tools, their training set was the internet. So it's all out there. Everyone's got it. It's just at the end of the day, it's like really fancy predictive text. It's a probabilistic solution. But organizations that are able to capture data themselves using AI and get it into their data stores and organize it as knowledge in the next phase of this race are going to be in a real unique position because they can get their AI tools running over data that nobody else has. And they can offer options and products and innovation to our clients, and similar for Reed downstream, that others can't. So we can keep that independence.
Yeah, I think, so just to add on that, like the data is the competitive advantage.
Correct.
If everybody else has all the same AI tools and we all have these models, and I mean, they're investing billions into these, but like arguably there's probably not too much difference between Sonnet 4.6, 4.8 with OpenAI's latest. What is really important is that we invest heavily into our data quality and granularity at Key, the accessibility of that. And then, interestingly, also your business know-how and context is what creates that fabric that makes Price Forbes a good business or makes Key. We have certain underwriting methodology or actuarial thinking. That, combined with the data, is the competitive advantage. And if you're throwing that into the open source or ether, that dilutes it. So I think that will become a bit of the moat, interestingly, is can you harness the data that represents your book, and then how you work with that, with your other business know-how, how it's documented, that creates the context, and you can create some really interesting outcomes that almost supercharge some of what you're already doing in your day-to-day.
Agreed.
Yeah, that's fascinating insight, guys. Thank you. Trent, I'm convinced that you and I both know where we sit as Price Forbes in the market and how competitive or far advanced we are compared to our peers around our technology solutions. Reed, this is an opportunity for you to plug Key here. Where does Key sit amongst the underwriters in the current race to digital, AI, augmented, and producing that data that we're talking about for the broking community?
So when we think about Key, I'm going to be strongly biased, but we do have a really strong moat in the quality and granularity of our data. I think it's just a function of how currently brokers access our capacity. They're entering all of that data in a structured format. We've built that. We also, when we were with Brit, we had a long length of quality claims data that, has historically trained our algorithms. So I think data is a real strong competitive advantage. Trading digitally, I mean, we are digital through and through, but part of the reason for me also joining Key was that I think the soft market influences a bit of how we trade, and what's that driving, motivating factor for how brokers now access our capacity. In a hard market, they needed it. In a soft market, they still need it, but it's maybe there's overline, there's lots of capacity. I think that's driven us to, when you're touching on your comment on digital, to really invest in what is digital trading. How are we creating a good broker user experience agnostic to where they'd like to go? So do they need to always come to our portal, or if it's in a workbench or workflow that Price Forbes are investing in, how do we make sure that that's a good user experience, that yourselves are able to get quality capacity to us as quick as you can so you can service your clients?
I was going to be a bit more humble and not plug Price Forbes, but since you mentioned it, Trent, where are we amongst our competitors? Use this opportunity to give the audience a sense of exactly where we are in our journey and where we think we are relative to the broker community.
Look, we've been investing for a long time now. Like, we're 8 years into our digital journey. Our philosophy is around having a deep workbench and a thin PAS. We look to build technology ourselves when it can provide an advantage. When it's commoditized, we buy it in. Like, they're our fundamental principles. But having done that for so many years now, gone down a few dark alleys, but found our way back out, I think we are really, really well positioned. You sort of speak to markets as we move around, and generally we hear feedback that we're in the top few out there. I think we can demonstrate that with integrations with Key. We integrate with a number of other markets where having very strong conversations with our larger US clients that are starting to catch up to our level of capability. So we're doing the right thing. Yeah, it's hard because change is hard. I think we're well positioned and we should be quite proud of where we are.
When we think about our investments in API, I think lots of markets are investing in APIs. I think one thing that we've thought about is we are intentionally making sure that we can access, or brokers can access our capacity through API as opposed to just the platform. But we're also simultaneously heavily investing into our data architecture and our in-house, overall enterprise architecture so that it's event-based. It allows us to overlay some of the forthcoming AI. It lets us contemplate potentially agentic trading with the likes of yourselves or innovative new ways of trading. And I think that sort of pause, invest to capture future opportunities while also keeping pace with having it so there's optionality and API platform really puts us in a competitive advantage. I don't want to say that we're the best. I think that we're keeping pace, hopefully, with some of the best.
There's a clear trend out there in the market at the moment about digitization. So 12 months ago, it was, so you'd sort of see press releases, but you wouldn't see anything actually happen. In the last 6 months, and my diary's full of meeting my peers around the market that want to talk about APIs, want to talk about data quality, talk about digital products. Like it's like the future is almost now, and this is the time to act. I think both our organizations are in the like doing the right things in this situation, but it does make me worry about those that aren't. They're going to struggle.
So I get lots of vendors come to me in my role trying to sell products and services to Price Forbes. And one of the things they always tell me is that we're entering the new school. We've gone from analog to digital to the new school, which I quickly try and correct people is actually a bit more old school in that I think actually the human differentiator is going to play a bigger part as the technology takes away some of those rekeying or perhaps more administratively based tasks that we have to carry out within the role. Can I ask you both for your opinion on how you think the human differentiator will play through in the coming years? Conscious you're both head of technical and digital in your own right, but you must have some thoughts around that.
Historically, when a new bit of technology came out, you give it to a software development team and go, what can you do with this? With AI this time round, we're giving it to the business and go, what can you do with that?
Yeah.
And then they figure out how best to use it. And then the technology team just make it safe and plug it into the data. So those that understand how to use AI to make themselves unique as a practitioner, how to do something for their client no one else can do, how to present a risk better to the market are the ones that are going to really start to move themselves forward here.
I think I like your idea on going back to the old school because I think what's interesting is we're in a high frequency world, lots of stuff going on our phones. It's really hard to not be distracted with everything going on. But I think what this technology may afford us to finally do is actually almost pause and think a little bit. Can finally get rid of some of those administrative or even sometimes complex tasks. It's fascinating when you use Claude Cowork that you could say, look, I'd like you to, let's imagine it was a roadshow presentation for one of your clients that's coming over. You can chuck that in and it can probably do an okay job. That used to be pretty time consuming.
I can tell you it does a very good job.
And so, you can pull that stuff together, but was that the most effective use of your time previously? I'd argue maybe not, but you sitting there and thinking, actually, okay, I've got the tower in front of me. What's the effective versus total cost of risk? What's going on with their business? What's happening with their business interruption? What are the macro trends? Almost think intelligently about, all right, now that I know that, it gets you closer to your client, makes you maybe you can think about doing some of that deep research. I think it just frees us up to be better at what we were originally intending to do. And some of those more menial tasks, you just come across excellent on. And, your client begins to expect that. It's quality all the time. I just think that it raises that quality of output and it frees you up to do more of what you're supposed to be doing.
I love that. And actually, just to give everyone an anecdotal point, we're actually in a position, this is a live example, where we're telling clients about the changes in their business before that individual even knew about it. Which when you think back to, we used to have one renewal meeting a year where we learned everything. We're now learning things before the individuals in those firms know about it. That's quite a fascinating shift in the way that we engage with those clients. If I may, just pivoting a fraction, guys, to the wider marketplace and what technology means for the broking community. I'm keen to get your thoughts on if we flatten the placement journey, if we have products and execution that looks very similar amongst all of the brokers, big, medium, small. What do you think that means for the broking landscape moving forwards if every broker looks and feels the same?
I don't think they're going to, for a couple of the reasons we touched on before. I think the way each broker will capture data and treat it will make them unique in what they can offer. But sort of to answer your question directly, I think if that was the case, I think London would be in trouble a little bit, because if it's all quite flat and all quite cookie cutter, it's going to be very easy to replicate what London offers globally, and we'll start to lose out, more and more to domestic markets. But I don't think that's going to happen.
It was an interesting. I'll speak a bit about it on the carrier side, and then I'll come back to the broker. But I think, us is key. We follow the lead, so we're not always individually, differentiating on the product or the price. We're following what that is. So it really does create especially in a soft market, which is kind of heading towards what you're describing. I think it's important for what means anything to our ultimate end retailer or the client who's actually buying the insurance. And I think, if I put myself in my old shoes once upon a time, it's that sustainability of the capacity if I'm an insurance buyer. Is this a client or is this a carrier that has supported me during the good times as well as the bad times? And so I think the credibility of the balance sheet and its ability to continue as an insurer to put out lines on business in the good and bad times and be with those as a risk partner, I think that's important. How that message is given out is an important piece. But in terms of sort of the commoditized world that you're describing, I still think that product differentiation is there. If, we may see that all of the brokers here in London have their cross-class quota share, and that may commoditize 10%, or we might have a certain proportion of it. I still think there will be innovative means of going about placement design that create maybe bespoke, dedicated solutions to some retail or individual customers that creates that availability capacity and maybe localized hardening spots. Interestingly, I think you're going to continue to see innovation in product. So, we're going to see, we talked about AI. That's a new class of insurance. We're starting to see.
Yeah,
there was a company called Corgi, I think. Weird name, but it is after the dog. But they do AI insurance. It's specifically meant for tech founding, startups, and they provide that insurance. That's just one example. I know Price Forbes. You guys are in on the carbon credit space.
Yeah, that's right.
So you do, non-delivery insurance. We're going to see interesting innovations that maybe continue to differentiate brokers, which are thinking about the customers, what's evolving in their landscape, how you're being attentive to designing products that meet their needs. So I think there's still lots of levers that are there for ourselves. I think it's working with our partners and our brokers on making sure that capacity is always there, it's easy to access, and that it's in a meaningful size and way.
It'll be interesting to see for the smaller brokers where the barrier to entry from a technology standpoint has significantly reduced. There's lots of service providers out there. There's auto-follow capacity, more digital capacity to plug into. I get the sense that actually it might create more competition in our marketplace because it's easier to come to market than it ever was before.
It will create more competition at certain points in the market. There'll be an element of the innovator's dilemma. But the smaller brokers will be forced to buy technology off the shelf. And if they're bought off the shelf, that means everyone's got it. So that space will become quite crowded quite quickly. The larger brokers that have significant tech budgets and can combine their own innovative technology to create their own innovative products will be sort of in a league above, I think.
And do you know any brokers that are doing that, Trent, by chance?
I know one. But it's the big 4, 5, 6 are definitely going down that path, and we see vendors come in day out going, look, here's a broker in a box. And it's a perfectly reasonable broker in a box for the AI age, but everyone's going to have it. How do you differentiate?
Yeah, and then on the underwriting side, you guys have a pretty sizable cover holder in MGA. I think technology is pretty exciting for these sort of small startup MGAs, but it kind of goes back to my earlier point on the sustainability capacity. It's being delegated from a capital provider, and you can have all the jazziest tech, and you can have agentic workflows, and it might do all of this. But if it's got a very localized small amount of premium backing the book, there's actually some contagion or some exposure risk. Does that pop in a market cycle if we have some systemic risk or we have some unexpected events? And then, maybe, I still expect that brokers like yourselves, or I anticipate, will be conscientious of, okay, that's exciting. Maybe I get a quick quote. Maybe it's got some really great terms, but I'm still hesitant to necessarily put my prize client that I've had for 15 years with this brand new as the lead. I still think that those market, you mentioned old school. I think those old school market dynamics still play true.
We have a live example, Trent, don't we, between us, where we have a client that has almost not had enough friction in the client journey or the sales journey using our technology, saying, is this almost a bit too good to be true? And that, I think, is something that's going to delay. I'm sure at some point everyone's going to be on board, but that is a buying dynamic that clients have to get used to, which is trusting the technology.
Yeah. Relationships and trust. Keep coming back to it. Doesn't matter how wonderful your tech is, unless there's a practitioner that has that relationship that can give the advice to go, no, this is okay, this is real. Yeah. It's all going to the right market, A-star paper. You won't be able to disrupt this industry or our part of the insurance industry as easy as maybe personal lines, because you will buy your car insurance for £1,000 off a AI bot, but you're not going to pay a 2 million premium for your super complex risk of an AI bot. You might be enabled through AI, you might have a digital journey, but there's still going to be somebody with that relationships going, this is okay.
So guys, that leads me to my final question for you both, which is, we've talked about digital client experience, we've touched on client dynamics. All of this leads to an interesting piece, which is underwriters often tell me that technology can't conduct risk selection better than humans, which I think we all accept is a slightly antiquated approach. My question for you both is the hard market still a thing?
I'm going to say no, and we'll come at this from a technologist point of view. The quality of the technology is increasing, and the quality of data is increasing. Therefore, you argue that we understand risk better. Now that we understand risk better, I suspect it may attract lots more capital to the market, therefore sort of making it less likely that it comes back. But I've never been a broker, so that's my punt.
So I'm slightly conflicted on my answer to this. In the one main, I'm very optimistic that the technology and the availability of data and all of the tools that we talked about, it smooths the peaks and troughs, I think, between a hard and a soft market. On the other hand, I do believe a bit in climate, and I think it'd be hard not to, as in the business that we're in.
That big event that blows it up. Yeah,
I think we're seeing increased frequency and severity of loss in climate-related instances. And I think that it's going to be a bit unsustainable for us as insurers to continue to compete and soften rates, et cetera. And then with the incoming headwind of all of these losses and nat cats that are coming through, I just imagine that we'll still see hard and soft market cycles, just by nature of the dynamics of the risks that we're seeing in the market. But I do think that the technology begins to smooth it a bit. And so that will hopefully make it mean that in the next hard market, it's ideally a bit easier for yourselves to get that capacity, or for ultimately your end insureds and clients that you're working on behalf of, for them to have that. They're not necessarily going to be left high and dry. Now, one last thing I think is that you will have localized hard or insurance deserts.
Right.
So I think we got California wildfire. I can't get rid of the wildfires that are happening there. And I think that that's an interesting space. Did the government step in? What does that look like? Are insurers still going to do that? I think they will still have pockets of hardening that are kind of hard to escape regardless of the tech. However, maybe the tech lets you balance the book bigger. Maybe you can certainly take California wildfire and couple it with, remote terrorism. I don't know.
The market will be more efficient.
Yeah.
Do we feel we're slightly more incubated as a marketplace then from black swan events, major crisis events? Do we feel that we are protecting ourselves as a marketplace and our clients as a result of the balancing of portfolios using tech?
I think, black swans still exist. I think that some of the incoming tech is going to be quite interesting. So historically we haven't really thought too much about polycrisis and what that means on cross-class. And we're increasingly in a polycrisis world where we've got geopolitical, we've got climate, we've got all these pieces. Some of the tech that we see with Palantir or with other types of companies where they use this graph analysis, those are ways where we can create inferences between some of those that creates maybe some insight. Now, that's pretty cutting edge, but I imagine as that stuff beds through, it means that we can navigate some of those a bit better. I don't think we've necessarily, I think the system hopefully is able to absorb those a bit better. We also have a pretty robust reinsurance sector.
Clients watching this will be very, very happy with you both. So guys, just to finish, a question that we're going to ask everybody at the end of each episode is, what is the most disruptive risk that you've taken in your career to date that's led to you both holding the positions that you do now?
As a technologist, I continually take them. So I'm a perennial early adopter. As soon as something's out there, I try and understand it and use it, bring it to where I'm working. Worked out quite well for cloud, not so well for blockchain. So far, so good with AI.
Yeah, it's a good one. I do continually like to take or experience change. So once upon a time, I was a geotechnical engineer. I worked in oil and gas and mining. And I had this famous, well, it was famous to me. My CEO at the time came along and said, I don't know if this one's for you. And it was, you can do the math, you could be an engineer, but I think you'd probably be better with, people. And so that led me to think, all right, why don't I do this? What was a risk at the time? Like, I'll quit my job, become unemployed, and I'll go seek out a job at Marsh. So that's how I transitioned into insurance. But I don't think I'd be sitting on a couch talking about things with Price Forbes if I didn't make that leap and transition away.
Good man. Thank God you did. That brings us to a close on our first episode of the Price Forbes podcast. A huge thank you to my two guests, Reed Stanway, Trent Somerville. Thank you both for your insights. Just a reminder for everybody, what you heard today is not insurance advice, nor is it financial advice. It's the general opinion of all three of us on the podcast today. A huge thank you to our listeners, and we'll see you soon.